Block shares are up over 25% in the last 6 months, and I last updated this stock as a buy rating on March 15th. So investors are asking me, do I still think Block is a buy even after the share price increase? I'll answer that question in this video. So one additional thing to remember is the company, like many tech companies, really focused on profitability in 2022. That's when the central bank in the United States started increasing interest rates to fight inflation, and investors and business owners all feared that a recession was about to happen in the United States, because when the Federal Reserve is increasing interest rates, it's causing economic activity to contract, because when you go out to buy things like a car or a house, the interest rate on those payments makes a big difference on your monthly payment. And so if the interest rate is higher, the monthly payment is higher, and you're less interested in purchasing those goods you need to finance. And so businesses like Block prepared for a potential recession. They let go of some people, they made some cost cuts, and those moves helped improve profitability meaningfully. You can see that big drawdown from 2021 to 2022, where its improvement stalled and reversed. And then since then, the improvement returned back up to 5.4%. Similarly, the company's returns on invested capital have been improving. The returns on invested capital measures how good a company is at taking investor capital and turning it into products and services. It's important because it also considers how much money the company is putting out and how much profits they're getting back, right? It's more impressive if you have one restaurant location making $100 million in profit compared to if you have two restaurant locations and still making a total of $100 million in profit. For two locations, you need to have put out more capital, more money to build those locations, more for the lease expense, rent expense, labor expense, etc. And so you're investing more capital to have two locations and bring back only 100 million. So the return on invested capital takes into account how much money a business is putting out in comparison to how much profits are coming back, whereas the operating profit margin doesn't include that. The operating profit margin only considers your sales or revenue and subtracts all of your cost that you incurred during the quarter. So these are short-term costs. These are not longer-term costs for fixed capital like machinery or a restaurant location or a warehousing facility. Those go on the balance sheet, and then they slowly go into the income statement. Click the link below to watch the full video.